The Philippines is a rising star in the global economy, positioned as an emerging market and a newly industrialized country in the dynamic Asia-Pacific region. As of 2024, its economic prowess is estimated at $471.5 billion, ranking it as the 32nd largest economy worldwide and the 13th largest in Asia, as per the International Monetary Fund. Highlighting the nation's economic vibrancy, the Philippine government points to its robust domestic growth and promising future. Recent data from the Philippine Statistics Authority, PSA, revealed a significant 6.4% expansion in the country's gross domestic product, GDP, during the first quarter of 2023. This strong domestic performance underscores the Philippines' resilience in the face of regional and global economic challenges. Even amid potential downturns in the broader economic landscape, the Philippines is poised to maintain its growth trajectory, driven by its inherent momentum and dynamism. The latest GDP growth figures align closely with the government's projected target range of 6 to 7% for 2023, signaling a positive trajectory for the Philippine economy. Notably, among the top 40 global economies that have reported their first quarter 2023 real GDP growth, the Philippines stands out as the fastest growing developed and major emerging economy. In comparison, India recorded a growth of 6.1%, followed by Malaysia at 5.6%, Indonesia at 5%, and China at 4.5%. Despite being the slowest pace of growth since the country began its recovery from the pandemic in the second quarter of 2021, the Philippines' GDP expansion of 6.4% in the first quarter of 2023 exceeded analysts' expectations and fell within the government's targeted range. Although this quarter's figure is lower than the remarkable 8.2% growth recorded last year, it can be attributed primarily to the lower base effect from the previous year's growth. Currently, the economy is readjusting to its pre-pandemic trajectory, poised to resume its path of robust growth. This stronger than anticipated growth comes amid challenges such as high inflation and ongoing interest rate hikes, underscoring the resilience and potential of the Philippine economy. While there's been a slight dip in inflation, down to 6.6% in April and further to 6.1% in May from a high of 8.7% in January, the cost of living remains a concern for many. However, if wages are on the rise due to increased job opportunities or better quality employment, households can still find ways to boost their spending power. According to recent data from the Philippine Statistics Authority, PSA, the country's employment rate has seen a steady decline, with 95.3% or 48.6 million individuals employed as of March 2023. This suggests a growing workforce, which could support increased consumer spending. The Asian Development Bank, ADB, anticipates a growth rate of around 6% for 2023, driven by a surge in domestic demand and a rebound in tourism. However, this optimistic outlook is tempered by concerns over inflation and geopolitical tensions. Despite these challenges, the government remains steadfast in its growth targets. Based on the strong first quarter GDP performance, officials maintain their goal of achieving 6 to 7% growth in 2023, with projections of 6.5 to 8% growth for the years 2024 to 2028. Looking ahead, the Philippines is poised for remarkable growth, with projections suggesting that its GDP will soar to $1 trillion by 2033, according to a report by S&P Global Market Intelligence. This would position the Philippines as one of the largest emerging markets in the Asia-Pacific region and a prominent player on the global stage. Not only is the economy expected to expand in size, but the average annual GDP per person is also projected to see significant growth. Over the past 2 decades, it has surged from below US $1,000 per person in 2000 to US $3,500 by 2022. By 2030, it is forecasted to surpass US $6,000 per person, reflecting a remarkable upward trajectory. The Philippines experienced a robust recovery from the COVID-19 pandemic in 2022, driving its economy to its fastest growth rate since 1976. With a GDP growth rate of 7.6%, the Philippines ranked alongside some of the world's fastest-growing major emerging markets, including oil-exporting nations like Saudi Arabia and the United Arab Emirates, as well as rapidly developing Asian economies such as Malaysia, Vietnam, and India. Over the past decade, the Philippines has demonstrated a significant improvement in its economic performance, with one exception being the challenging period of the COVID-19 pandemic from 2020 to 2021, which caused widespread disruption to global economic activities. From 2012 to 2019, the Philippines consistently achieved annual real GDP growth rates, ranging between 6% to 7%. However, the economic rebound in 2022 propelled the country's real economic growth to its highest level since 1976. Household final consumption expenditure surged by 8.3%, while gross capital formation saw a remarkable growth of 16.8% year-on-year. Looking ahead, the near-term outlook for 2023 remains positive, with expectations of continued strong economic expansion. The latest S&P Global Philippines Manufacturing PMI survey results for March 2023 indicate ongoing expansionary conditions for manufacturing output and new orders. Furthermore, sustained remittance inflows from overseas Filipino workers, the rapid growth of the ITBPO sector exports, and the gradual recovery of the tourism sector are all anticipated to bolster economic growth momentum throughout 2023. According to the IT and Business Process Association of the Philippines, the total headcount in the ITBPO sector reached 1.6 million in 2022, with sector revenues soaring to $32.5 billion. The long-term outlook for the ITBPO sector in the Philippines is continued with high growth, helped by key competitive advantages of a well-educated workforce and English language proficiency. The Philippines' economy is forecast to continue to grow rapidly, with total GDP doubling from $400 billion in 2022 to $800 billion in 2030. A key growth driver will be rapid growth in private consumption spending, buoyed by strong growth in urban household incomes. By 2033, the Philippines is forecast to become one of the Asia-Pacific region's small group of $1 trillion economies, joining mainland China, Japan, India, South Korea, Australia, Taiwan, and Indonesia in this grouping of the largest economies in APEC. This strong growth in the size of the Philippines economy is also expected to drive rapidly rising per capita GDP from $3,500 in 2022 to $6,200 by 2030. This will help to underpin the growth of the Philippines' domestic consumer market, catalyzing foreign and domestic investment into many sectors of the Philippines economy. Looking ahead to 2050, the Philippines stands on the brink of becoming the world's 18th largest economy, according to a forecast by Capital Economics, a macroeconomic research organization based in London. However, this trajectory hinges on the nation's ability to address its infrastructure deficiencies. Under this projection, the Philippines' nominal gross domestic product, GDP, is expected to soar to $4,862 billion over the next 3 decades, with nominal GDP per capita reaching $33,650. By 2050, the Philippines is anticipated to rank just below major global economic powerhouses like the United States, China, India, and others in terms of nominal GDP at market exchange rates. The Philippines' membership in the recently established Regional Comprehensive Economic Partnership (RCP) trade deal is poised to be a significant boon. The favorable rules of origin treatment within RCEP offer cumulative benefits, facilitating the establishment of manufacturing supply chains across member countries. This advantageous scenario is expected to attract foreign direct investment into the Philippines and other RCP nations, particularly in low-cost manufacturing hubs like the Philippines. According to Arsenio Balisacan, the head of the National Economic and Development Authority, NEDA, the Philippines has struck a favorable deal with China through the Regional Comprehensive Economic Partnership, RCEP. This agreement is seen as a game changer for the Philippines, opening up access to a significantly larger market. Joining RCEP is not just about economic gains, it's a statement of the Philippines' readiness to engage in global commerce. It demonstrates the country's commitment to abiding by international trade regulations, customs protocols, and labor standards, aligning itself with global norms and practices. Notably, the RCEP provides access to a market representing approximately 1/3 of the world's population. With such a monumental framework in place, the economic outlook for the Philippines in the coming years appears exceedingly positive, promising substantial advancements in economic growth and development. Despite this promising outlook, data from the Philippine government's Family Income and Expenditure Survey in 2021 revealed that approximately 20 million people, or roughly 18.1% of the total population, still reside below the poverty line. However, the projected rise in per capita GDP and living standards holds the potential to drive overall human development indicators upward and significantly diminish the percentage of the population living in extreme poverty over the next decade. If you found this information valuable, don't forget to show your support by liking and subscribing for more insightful content. Thank you for watching.